Hey, MCE crew, there is a new tax rule that if you own a small business or if you're thinking about opening a small business, which I hope you are, if you don't already have one, uh, you need to know about this rule because this is something that you're going to need to do. Now, let's just jump right into it. The IRS is going to start looking into digital payment services like Venmo, Cash App, Zell, PayPal, and they're going to be looking at these uh, applications for certain transactions that equal $600 or more in a year. And if that transaction has to do with some sort of income generated from your business, and as I read this, it might even be from things like, maybe you set up a yard sale or something real temporary. Maybe you got a craft or an art that you produce and you did a one-time sale of it. Well, if it generates more than a certain amount of money, the IRS wants their cut. So let's jump right into this and tell you what you need to know so that you can be compliant. And look, there's an individual out on one of the platforms, social media platforms, that was telling people that they would tell them how to avoid this. And we'll get into what that individual was saying in a minute. But it it smacked of tax evasion. And I don't want anyone here to endeavor in that sort of behavior. If the IRS is levying what you think is too much taxes, then you need to sit down with your CPA and see if there are any legal avenues for you to mitigate your tax obligation. The other half of that is you need to improve your business so that you can make more money legitimately. Okay. Uh, don't engage in any tax evasion because that's going to come back and it's going to make it really ridiculous when you look at what you tried to save up against what the IRS can do to you. They can fine you. They can levy liens against your property. They can even put you in prison. So if you are under the rubric of this new rule, abide by the rule. It's easier. Life is so much easier when you just do things the right way. A new tax rule will impact millions of small businesses in 2022. You can thank one small change buried in the American Rescue Plan Act of 2021. It's a little piece of legislation that, most people don't pay attention to this stuff. And so slides right in. Let's suppose you're a small business owner or a freelancer, okay? Freelancing, like when you go to these certain sites, these people will do different jobs for you, and they'll charge you a rate and you'll pay them a lot of times via one of those applications, PayPal, uh, Cash App, etc. So you're a small business owner or a freelancer and you get paid from a digital service, one of the digital services we talked about, or any third party settlement provider that's accepting credit cards on your behalf and putting money directly into your bank account. If those payments were for goods and services that you sold to customers, uh, it was previously up to you to make sure you were reporting the income on your tax return. So it was like an honor system, okay, prior to this new rule. But now, beginning in 2022, if you receive more than $600 in total during the course of a year, regardless of how many customers are paying, your payment service is required to report the amount to the IRS. So they're going to be sending you, your payment service is going to be sending you a form, and you can best believe they also communicated that with the IRS so they know, okay? So you need to go ahead and declare the income on your taxes. Now, a couple of things. You're supposed to pay your taxes. If you don't like the tax regime that we have, then there are some avenues open to you. You can vote for different representation. there is one party out there, one political party who loves taxes, and they don't make any bones about it. They're not shy about it. They tell you straight up, we're going to raise your taxes. So if you got a problem with that, vote for different people. Or you might already be voting for those people, maybe looking to moving your business to a different state. Now, I know we're talking about a federal rule here, but you are responsible for state taxes as well. And if you're just trying to reduce your overall tax obligation, there are states out there that are very, very tax friendly. Okay, so you might want to look into that. Let's be clear, you should be reporting these amounts as income anyway. We just talked about that. But the reality is there are 30 million small businesses, freelancers, and solopreneurs, independent contractors in the U.S., many of them who receive a number of small payments from many customers throughout the year, and they may forget. It's possible. But this goes into a larger issue. We're going to see cash become totally obsolete because the individual I was telling you about earlier was suggesting that you just do cash transactions, and that way no one's reporting anything, right? Well, a couple of things with that. Number one, again, it's encouraging you to engage in tax evasion, and you do not want to do that. Number two, if you're running a business and you want that business to grow, engaging in cash transactions is going to be very difficult, and it may contribute to the eventual, dissolution of your business. Simply because if you are, let's say, running some sort of business where you have products on Amazon, for example, or Etsy, or one of these, nobody's paying cash for that. So, in order to reach the type of potential customer base that would actually put real money in your pocket, you're going to have to do these things electronically. And that's the direction that we're moving in. Cash, the dollar bill, the physical bill, is going to become a thing of the past. You can see it with how the US government treats Bitcoin now. They were extremely adversarial with Bitcoin for many, many years. And then in 2020, they just did an about face and went ahead and allowed a Bitcoin ETF to be instituted. And in order for that to have happened, it had to go through all sorts of back and forth and processes and sign-offs with the SEC, or the Securities and Exchange Commission. And that's not going to happen. That's not going to be allowed to happen if the U.S. government doesn't want it to. So I think someone or several someones within the government looked at it and said, look, if we can control Bitcoin and these other cryptos, then we actually have a window into seeing exactly how much money people are making and transacting, the better to tax you with. Cash, these under the table transactions where you might have some guy go in and work maybe a bartender job or dishwasher job, those types of jobs where the employer says, hey, I'll pay you in cash. That way the employer doesn't have to deal with unemployment or anything like that. And the employee doesn't have to deal with taxes. That's going to quickly become a thing of the past. And one of the reasons why we can see this happening is, look, just the other day we did the video talking about how the U.S. government, the IRS, says, hey, we don't even care if you're involved in criminal activity. We still want the taxes from stolen property, drug dealing, and bribes. Okay? So you know that they're going to be really dogged about getting the taxes on income that was legitimately generated. So at the end of the day, gotta pay your taxes. If you want to, again, mitigate your tax obligations, there are things you could do. We talked about moving to a different state to control your state taxes, and moving your business to another state might be easier than just picking up and moving your entire family on your household situation. But then again, you might want to just consolidate. And if you're getting better tax treatment in another state, why not go there and, be located there? Especially if you're running some sort of internet business that is not dependent on you being in a certain location in order to make money. So you can do that. You can support candidates who understand that taxes typically suppress the type of economic activity that we want to see in this country. And higher taxes, that is, lower taxes, actually generate a lot of economic activity and end up putting more money into the IRS anyway because there's more activity. And so with more activity, it's more of an opportunity to levy taxes. But the Democrats don't seem to understand that. I think in many ways some of them do, but I think they like to use taxation as a form of control. They really don't like rich people unless it's them. Like Nancy Pelosi obviously loves her husband, who is a very, very wealthy man. But you saw the back and forth between Elizabeth Warren and Elon Musk. We did the video on that. And yet and still, Elizabeth Warren, Bernie Sanders, these people are worth millions, but they got a problem with other people that actually produce things being wealthy. So, story for another day, but that's what's going on. You need to continue to pay your taxes, because I know everybody in this audience, if they're getting those types of payments via one of those applications, I know they're paying their taxes on that money. So you need to continue to do that. And if you are thinking about starting a business and taking payments in this way, you need to definitely be aware of this. So talk with your CPA, talk with your tax attorney. Make sure that you are abiding by this, that you understand what's going on. And, guys, I'll talk to you soon.